A new CBS News investigation revealed that many Florida homeowners have had their home insurance policies transferred out of the state-run insurance program into dozens of small private companies without their consent or input. While looking into exactly how this happened, CBS News learned from sources that one of those companies may have diverted millions of dollars in consumer payments to investors. Let's bring in CBS News national correspondent Ash-har Quraishi. Good to see you, my friend. It is legal, of course, for an insurer to transfer your policy, or the question is it? Because most people don't even know that this is happening, and how are they able to do this?
Right. So just a background. So in the cases we looked at, these were people who were policyholders in Florida's publicly administered insurance of last resort. Now, most states, especially in high-risk areas prone to extreme weather events like Florida, California, and Louisiana, they have similar insurance markets of last resort. Now, what is less common is for the states to unload those policies onto private insurers. In Florida, for example, we found more than 1 million people in the past 2 years were unloaded, or depopulated, as it's known, off the state insurance policy into smaller privately owned insurance companies. Now, from the state's perspective, the last resort was not meant to be a forever solution, and that way taxpayers aren't on the hook if there is a major disaster that needs a payout. But consumers we spoke with were frustrated because they have little recourse, given that they have a high-risk policy and it's not easy to find a company willing to cover them. So when the state does this, it makes it worse in the sense because the private insurer is allowed to charge up to 20% more on that new policy. Jarika.
And Usher, you report on one insurer in particular that is accused of diverting millions in profits out of the company. Explain that.
Right. So insurance companies are highly regulated and they're limited by law in how much profit they can earn. But whistleblowers tell us that the company we reported on was funneling money to a related company that has no profit limits and was owned by the same investors. Now, this is a problem because it diverts funds out of the main insurance company. And if there's a major weather event, like, say, a hurricane, the insurance company may not have enough liquidity to pay claims and could collapse. Now, this is exactly what happened back in 2018 after Hurricane Michael, when we found 9 insurance companies collapsed in the aftermath of that storm, impacting hundreds of thousands of policyholders.
So the big question in all of this, what can policyholders do to protect themselves when they are filing a claim?
Right. So gather evidence, obviously, videos, photos, and a list of lost items, and have a pre-inventory list of valuables and property with serial numbers before there's damage. So keep a copy of your policy with you on your person. If you can't return home, ask your agent about additional coverage for living expenses, and keep hotel receipts. Be as thorough as possible when filing the claim, and keep copies of everything, obviously, including a phone log and notes of conversations that you've had with your insurer. This is also important. If they do offer you less than you think you deserve, consider hiring a public advocate or attorney. Now, we have a lot more information on our website, cbsnews.com, including some of the red flags that state regulators found in relation to that company that we looked at, Jarika.
Ash-har Quraishi, all over it. Thank you so much.